I think it was a lot of people that were just blinded to the truth, right? To be honest, it's not only the company, but like, let's imagine you have $100 billion, and then you start spending $30 billion on trying to rescue the ecosystem, so called, and then you spend another 20 billion, disregarding that, and then you just keep another 50, and then you realize that the collateral of all of that is just FTT tokens. I mean, who is lending to them needs to understand that the liquidity is a big problem in the industry, right? So it's like everybody's closing their eyes on this, right? And
Yeah.
then all of a sudden you think you have $100 billion, you think you only spent 50, but then when you have an 80% drawdown, then you basically margin called and everything is belly up, right? So I mean, I think it might not have been like deliberative, like you said. It's just it blew up, unfortunately, like this. But it just goes to show that reserves are very important, and how liquid the reserve is also very important. And I'm talking about even like stable coins, And I spoke to several protocols where I say, hey guys, you can have your stable coin in three things essentially. One is dollars, and then you depend the U.S. Treasury Department or the IRS is going to rate you. Two is you have gold, which is neutral, and you can do that, but you have to do it well in a country like Switzerland. This is what I do essentially. And three is commercial paper or risky things that essentially provide you yield. And this could be shit coins with yield, or it could be commercial paper, and then they will discount that to a certain percentage, and then give you a loan to value. And really, most of the reserves, and this is going to be the work now, is to figure out who has them and who does not. What I'm trying to put through here is a lot of protocols and exchanges. The market cap or their tokens, and I don't want to create panic here, but when you back your collateral by something that is just as volatile, it becomes really dangerous. So protocols and exchanges essentially are looking into solidifying their treasuries in the sense of having some substance behind it. What's a shame is that we have the technology to basically have transparency, and it's a shame that it's just now that there is a rush onto the transparency of reserves.
So you're saying they're doing it. So the proposals and the protocols and exchanges that are looking to solidify their treasuries. Are you saying now there's a lot of them looking to solidify their treasuries?
Yeah, I mean, essentially, you don't know if it's a cash out or if it's just solidifying the treasuries. To be honest, at this point.
Okay. Okay, and what do you mean by solidify their treasuries?
Well, basically, in a company's treasury, right? Even in the banking system, you have a tier one if you want, or something that can constitute reserves, right? And typically, those things are cash or AAA bonds, or something that, or the rest of the reserves that you do. Typically, if you have bitcoins or something else in Switzerland, for example. You have to discount them a certain percentage. I think it goes up to 800% discount, right? So sometimes it's not efficient to hold the bitcoins this way, because then your treasury is not very efficient, right?
At the end of the day, today we can say, take your coins out of the exchange, not your keys, not your coin, and there's going to be a rough patch, but the crypto community can survive that. Now, I think the biggest threat right now for the regulators and for everybody else, essentially the system as a whole, is that you can't say the same thing if you say the normal banking system. Like, actually, you would not say take your money out of the bank, because that would unleash like an apocalyptic situation. So when you look at things into perspective, it's very important to recognize that this is actually a better system. It's not a worse system like a lot of people might think. So I think it's important to say that to the public as a whole.
I'll kick it off, and then Ram, you can continue. So what was discussed earlier was FTX. Why is FTX acquiring Voyager Why did they try to acquire Voyager and BlockFi? And reason number one was because sorry, Kim.com just dropped out. I'll try to bring it back up. Reason number one was they held a lot of FTT tokens, and if they went bankrupt, they'll have to liquidate those tokens, and then FTX's collateral has just gone to shit. That's number one. Number two, that Ram mentioned, and that's validated by Ram. Number one. Number two is that they owed FTX hundreds of millions of dollars, which means if they went bankrupt, then FTX will get a margin call and they're fucked as well. So then FTX tried to use their worthless, quote unquote, worthless assets to try to acquire Voyager and BlockFi to avoid those two scenarios. Kim, I'm just sending you a co-host invite. I can see you there. You made a third point that I haven't mentioned. Do you mind mentioning the third point?
So now here's the really, so all of that is, a lot of that is verifiable in the Voyager Chapter 11 process. So there was an unwinding of the loan as part of the negotiation, and it did lead to both Bitcoin and FTT collateral being unwound and reversed back to as a result of that. Now, the interesting thing is that in the Chapter 11 processes, they wouldn't take anything like FTT tokens. So I think that he had to start the loans. And this is this is just another one where he would borrow against the FTT token in order to acquire Voyager and BlockFi.
Right. So,
yeah.
Go ahead. You're right. No, first of all, it's an excellent insight. I think that supports the hypothesis because the FTT balance sheet is not sufficient to consummate those transactions. So here's the thing. If you're the parent co and you acquire a subsidiary, the subsidiary in this case is Voyager. Voyager has a claim on Alameda to the tune of hundreds of millions of dollars.
Yep.
So so it's very clever what Alameda and FTX were doing is say, look, if we buy the sub, then they assume the liabilities of the subsidiary on the balance sheet. So the real consideration to acquire wasn't FTT token. The consideration is the form of payment. It's not cash either. They were insolvent. They have no cash. The consideration was the FTX equity. And in doing so, they could stave off the margin call. And secondly, through controlling the portcos and influencing and coercion, namely moving these portcos to the custody of FTX Global, they could access client funds illegally as a source of funding. So it's a very elaborate fraud. This is not a lie or a failure to disclose or a conflict of interest or a failure to meet client. It's an elaborate fraud.
No, definitely. And SBF was also using the opportunity to acquire BlockFi and Voyager in order to misrepresent to new equity investors because he was going out and trying to raise a minimum of $1 billion, but he was saying in order to get the $32 billion valuation, he was saying it's about taking the opportunity of acquiring the licenses from BlockFi because they had a fast track. They had the SEC settlement that then gave them a fast track to their S1 filing that was going to make them the earn program because all of the lenders had cease and desist orders for offering illegal securities because if you offer yield, it's a security, and every single platform was getting cease and desist. So BlockFi settled with the SEC 100 million and got a fast track to do the S1 filing to make it a public company. And SBF essentially said, well, I'll give you a $400 million line of credit collateralized by the FTT token. Go through that process. And then we can try and solve our regulatory issue at the same time. And he said, right, you get the license, Zach, and then we'll acquire a $4 billion company for $25 million by giving you this line of credit collateralized on our token. Now, here's the really interesting part. The bankruptcy, so even the bankruptcy process got scammed because they didn't do the due diligence based upon the holier than thou perception of FTX. So they even got fast tracked, and this is where the CZ stuff comes in, because SBF, because he knew that if he doesn't get the bid, if he doesn't win the bid, then Binance is going to is in the bidding process. So in order to win the bid, he then started he started trying to sanction CZ, saying that they were a Chinese company backed by Chinese investors and a national security threat. And that's the bit that CZ said in his original tweet.
The crackdown by regulators. Thierry, what do you think of this? I see you putting your hand up a few times.
I mean, look, just listen to the level of degeneracy and Ponzi of going on to buy your bailout with because of the funny money that it has that could trigger a margin call, so you collateralize even more money on your fake treasury to buy them out. I mean, that's like another level of Ponzi here. And I think that's the first elephant in the room is once again, and I'm not going to be tired to say this, is what is the treasury about? Is it commercial paper? Is it discounted Bitcoins and shitcoins? Is it even real? Because I believe if you were to look at the price discovery of things today, given the pump and dump and the fake liquidity that there is, that the exchange themselves create, I'm sure that the market cap of all total coins will be 1/3 of what it is now, right? And the bigger freak out, I would say, as of today, is that the traditional banking system is even worse. When you consider 8% fractional reserve banking, I think that's what they're really scared about. They know that if people start questioning reserves in the crypto space, I mean, you have all the reasons to question the reserves in the traditional space, and that's the biggest question. Is like all of this could literally go into a massive, chaotic deleveraging, and I think I agree with what Kim was saying before. We got to salvage this one part of the system. We got to salvage this one part of the decentralization and transparency if we don't want to fall into like regulation for the sake of regulation and then keep the old system that is even worse alive, right? So it's like right now, the tragedy of this world is that the biggest tokens where everybody is kind of going are fiat, which is completely contradictory to the idea of Satoshi. I mean, I always say you vote with your feet and with your wallet, right? So I'm in Switzerland and I put all of my stuff in gold. And precisely because of the degeneracy that was going on the crypto market, even though I could have gone on the public blockchain since 2017, I'm a commodity trader. I know that if you want to trade with anybody you want, you need neutral money. And I used to do that for big commodity trading houses so that you don't have sanctions, so that you don't depend on the US Treasury. I met with Cisse in 2018 and I told him, don't touch the dollar. The IRS is going to raid you and you're going to be dependent on the US Treasury. And, guess what? All exchanges without exception, they all have that problem today. And I'm receiving calls like over the last 2 weeks. And this is bizarre because this is 5 years me saying this. And then the last 3 weeks, I got people calling me like, hey, do you accept basically, I mean, I'm not mentioning names, but basically, do you accept my shit coins for gold? And the answer is no. Give me Swiss francs, then I can buy the gold, then I can get you the stuff. But they can't cash out. And that's the big point. And I'm sorry to bring the.
What do you accept? What do you accept, Thierry? What coins do you actually accept for gold?
I don't accept coins. I accept hard cash Swiss francs. I mean, I can go through exchanges because I have exchanges. But if you give me Bitcoins or Ethereum, which are the only two I accept, I would literally what I would go and sell them and buy a real thing. So like I would buy a real bar of gold, but I would give you the price of the refinery. But you need to go through a KYC. That's why I don't want to have 1,000 KYCs with people. I didn't do an ICO for that reason, So I need intermediaries. But that's another question. What I'm trying to point out here is it's a problem of governance once again. If you don't have people who are experienced in the field, you will end up with those malpractices. And then the second problem, even if you have the people who are smart, you just need a little bit of integrity. And it is. Let's look at it from a positive side. We need purges. We need purges like we saw in 2017 and like we're seeing now. And then hopefully we're gonna get stronger off of this. But seriously, I don't see any end. Like people are supposed to be demanding today transparency so that we finally know what's the collateral behind those shit coins, or because to me 99% of them are shit coins. So even the dollar is the biggest shit coin, but Bitcoin is another shit coin, but at least it has a limited supply. That's the way I see things. But when you look at the stable coins, it's a fallacy on the first place, and then on the second place is, well, we're supposed to be blockchain and transparent, and we're not. So this is the time to do so, I think.
Sorry, did you just say Bitcoin is another shit coin, but at least it's limited supply?
Yeah, I mean,
you're on the wrong place.
no. You know what? You know what I think, Simon? I think Satoshi was very careful with his words, and when he says it's the electronic peer-to-peer cash system, that's exactly what he meant. But cash and money are different. I'm not on the Peter Schiff completely degenerate side either. But gold is money. This is 6,000 years of evolution. It's money. Cash is cash. And between you and I'd rather have Bitcoins with limited supply of 21 million, and that's my cash, than have a US dollar that already since 1913 it has lost 95% of its value, or since 1971 it's lost 80 or so. So I get you, but it's still not money though. But that's another conversation. What I'm trying to say here is, it's ironic that we go into fiat, to try to find solutions that are basically just replicating the fiat system right now.
Yeah, but there's a real thing you can't overcome with fiat, and that is the same with foreign FX. If the vast majority of your expenses are in one currency, you can't manage your financial affairs unless you're spending in the same currency. And so even the same with gold. Savings, of course. But with expenditure, you can never overcome the problem that my mortgage costs this in this currency, and therefore I need to earn in that currency in order to not take
It's always
volatility
been
risk.
like that. It's always been gold. It's always been gold. It's only since
Sure,
1971. It's not even 50
and in
years.
hyperinflation, in hyperinflation, that is the problem. You can't reliably spend that month.
I mean,
So then
here's the thing. At the end of the day, one thing we can agree on is the more choices you have as private money and as alternative, the better off people are, right?